said I miss you. Never did ever tears to the tissue, trying to forget you. I ain't got nothing against you. We all got issues, but I'm tired of being tired. That part of me that died. I see it, then I don't act like I'm not. Alright, yo. Let's get to it. So today, you know what I'm saying? We back at it with another course video. Feel me? I'm going in pretty much like in order of my confluences. So we covered liquidity, fair value gaps. Today we're gonna get into a break of structure, right? So we're getting into break of structure, and you can use break of structure. That's not so much for entries or exits, but that's more for like your daily buys. So the break of structures, and when you get on the market in the morning, the first thing you want to look for is your daily buys, right? Are we in a high time frame uptrend? Are we in a high time frame downtrend? Are we sweeping high time frame liquidity or filling imbalances? Then you can figure that out for your daily bias. And yeah, so we're gonna get over a breaker structure, right? But the first thing we want to be able to identify, right, or recognize is highs and lows, right? So that's the first thing I want to cover. Um, so it's very, very simple, but surprisingly, a lot of people get confused about this. Like when I teach people, some of the most questions I've ever been asked were just on burger structure. So I guess it's kind of complicated, but let me try to break it down for you as simple as I can. So a low, right? We're going over highs and lows. So a low is simply a red candle followed by a green candle. That's a low, right? A low is a red candle, green candle, right? Or whatever color you got your trading view settings on, right? It's a down candle and then an up candle, right? And the lowest point of these two candles, the absolute lowest point, is the low. So that will be our low right there. Red candle, green candle, low. A high is a green candle, red candle, right? An up move and then a down move. It's a two candlestick pattern, right? That will be the high, right? That will be the high. A break of structure is when a candle closes above a high or low, right? So we're on the daily. Let's just say these are 4 hour highs and lows, right? Let's just say this is a 4 hour high, 4 hour low. Um, let me move all this shit over. Let's focus on highs, right? So market's trending up, right? Let's just say, boom, we're in an uptrend, right? Okay, we're in an uptrend. This is our chart. We come up, we create a high, boom, we get a down candle. A break of structure to the upside would be okay, we made our move up, created a high, made our move down, right? Come down, maybe we sweep out this low, make a move up, boom, and then we close above that high. But it's not a wick, it's a candle closure. So it would look something like this, right? That's what this is, a break of structure, right? We have our high and boom, our candle closes above it. Now this is confirmation that okay, we have liquidity here. Right, this high contains liquidity because we're buying, people have to buy to make this high. And then all of a sudden, in order to make this downside move, you have to sell, right? So people sold and their stop losses are above this high. So we know if we come out up and hit these stop losses and trigger a move down, that's a liquidity sweep, like I covered in the first video. But a closure above it is a break of structure, indicating that the sellers are no longer in control. We sold off, we came up, but then boom, the buyers smacked them, and damn, that shit was loud. Smacked them, fucking closed above it. Buyers are in control. Now this is when we would get our high time frame bullish buys. Right now we're going to the upside, and then what we could wait for is a pullback to equilibrium, to this order block, whatever low break structure to continue upwards, right? And yeah, so that will be a breaker structure to the upside. Okay, now let's talk about the downside. Let me get rid of this, this, and this. Okay, so now let's talk about a break of structure to the downside. Oh my god, am I sped? Oh shit, am I allowed to say that? I don't even know. Fuck it. All right, so we have a low, created a low. right? Let's say we're in a high time frame downtrend, right? Boom, 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 right? That's our chart. God damn, I might just be boom, boom, boom. All right, we're in a downtrend. We come down, we create a low, and then boom, we create a high. Okay, so boom, we create a low. We have a green candle. This is our low. A break of structure would be a move back down to here with a candle closure. Let me do that again. It would probably look something like this. Boom. Candle closure below this low, right? This is our low. We want to see a candle close right underneath that low. Now that is a god damn, I'm freezing. Brick as hell in my crib, man. I swear to God. Shit is crazy. God damn. Alright. So breaking structure, that was our breaking structure to the downside. And what this is telling us is okay, the sellers are more in control here. The buyers tried to buy this up, make a move up, but no, the sellers smacked them and we're creating more lows. So how can we use this to make money? How can we use this for trade entries? How can we use this to find good setups? Well, we could see we just broke structure on a 4 hour time frame to the downside. Then we scaled down into our lower time frames for a pullback into one of our other confluences to enter short, right? So this is just giving us our bigger picture view, right? Let's hop into some charts and show you what I'm talking about. All right. Jeez. All right. Let's look at this. We're trending up. We create a high. Green candle, black candle. Let's mark out our high. Let's go in replay mode. So we're looking at this chart, right? We have our high here. We also have a high here, which we broke on this candle, but it's pretty similar. So we have our high here. We broke above this. Now, what is this indicating to me? What time is this at? This was our end of market, but let's just say the next day market open. Let's just say we see this, right? We see a 4 hour break structure. We have a high, boom, we smacked it, we closed above it. Now, how could we use this for entries, and how could we use this to further our bias and to further our trading? So we would scale down. Now let's look at the lower time frames. All right, let's look at the 15-minute. Okay, so we see this, right? We see a high. We know this is a 4 hour break right here, and then we see a 15-minute imbalance right here. So now we know after talking about imbalances and liquidity that we didn't take this liquidity. We closed above it. We broke our structure above it, telling us okay, the buyers are stronger, right? We're not hitting these buy stops anymore and targeting downside. We're targeting upside. We scale down and we look for more of our confluences to the upside. We see a bullish fair value gap comes down, gets filled, good rejections out of it. All right, on the 5 minute, it looks the same. 5 minute fair value gap. Really, this is just we would look at our 15 because the 5 minutes not giving us much. We have a tiny little 5 minute fair value gap, which we also kind of respected barely. Um, and yeah, so the 15-minute looks great, right? But when you're dealing with 4 hour time frames, right? We're on the 4 hour breaking structure. The 15 minutes a great confluence because you have to keep in mind like the 4 hour, you can't correlate the 4 hour and the 1 hour, right? That's like it's like trying to correlate. Shit, I can't even think of an analogy. Damn, like they don't go together. You know what I'm saying? You can't, they don't go together. You have to correlate higher time frames with higher time frames, right? The 4 hour and the 15-minute go together, and then the 5 minute and the 1 minute go together, and the 15-minute and the 5 minute correlate. But you can't be so far across the spectrum, right? It's a broader, like it's a spectrum of numbers and time frames, and you kind of have to group them like okay, high time frame, middle time frame, low time frame. And that's when you compare confluences based off of it, right? It has to make sense. So 4 hour break, 15-minute fair value gap, respecting. This is furthering our bias to boom. We can go long in here, anywhere within here, stop underneath the fair value gap, and then we could target more upside. Right? Let's go into the hourly time frame. Let's go in the 4 hour time frame, and let's see what that would look like. Well, okay, we're on the 4 hour time frame, but It would have looked like this. It would have looked like this. Okay. Yeah. Right. This is a 1 to 20 risk to reward. Right. So obviously, this is probably not going to catch the whole move. But my point is, any trade within here is a beautiful trade, right? Anything just because we noticed a 4 hour break, a 15-minute fair value gap, and boom, like simple as that, right? So that's to the upside. Let's just try to find an example to the downside, right? Let me get out of replay mode. Okay, you can see right here. Let me find a better example. I'll find a good example for you guys. All right, right here. We have our low here. We break through it on this candle. We could scale down. Let me go on replay mode. Mm. Ah. Where you want me to stay? God damn, bro. My chart is getting back confusing. All right. But basically, what we see is we see our break of structure, our fair value gap fill, and then we could enter short. Only because we saw that there was a 4 hour break, right? 4 hour break, fair value gap fill. We catch this downside move, which is we're on the 4 hour time frame. This is a big move, guys. So it's great. You have to keep time frames. Damn, my computer's about to die. You have to keep time frames in mind, right? And you have to know when to use it, right? So let's find some more examples, right? Boom, right here. We have a high. Let's scale in. We broke it on this candle. We pulled back on the next candle. Boom. This pullback on the lower time frame would be our hourly imbalance fill, I guarantee you. Mm-hmm. God damn, bro. These charts are cooked, bro. This shit fucks my fingers up, low key. Like, I be getting arthritis and shit, but yo, chill, let me chill, let me chill, let me chill. Boom, all right. We break it, we come down, we fill a 1 hour fair value gap, like I said. Boom, we break it on this candle. What do? Fill in this imbalance. I don't know why I drew it like that. Boom, fill in this imbalance beautifully and scale rocket to the upside. So that's pretty much fair value gaps. That's pretty much breaks of structures, and that's how you can use it to your advantage to catch moves to the upside, to the downside. Right, the first thing you always want to do in the morning on Sunday night to prepare for the week for the day is just look at the high time frames. Look at the 4 hour. Look at the 1 hour. Look at the daily. What structure are we forming? Like that's what I was just doing right now. Right, let's go to QQQ. It's Sunday right now as I record this. I'm getting ready for the week. What did I do? Right, I'm marking out all my liquidity, all my imbalances. I started on the daily time frame. We have daily lows here, we have daily lows here, highs here, highs here, highs here, right? I slowly scaled down. I marked out all my 4 hour, I marked out my 1 hour, and then all I'm doing is waiting for a liquidity sweep and then a 5 minute break, and then a 1 minute retrace to the downside, or a break of structure to the upside, a 5 minute retrace back to the downside to an order block for a value gap to catch the upside, guys. It's very simple, right? You just want to watch these highs and lows and see how the market reacts off of it. It's okay to be patient. It's okay to wait. Let the money come to you, right? Don't chase it. The faster you chase something, the faster it runs, right? You gotta attract this shit. You gotta wait for it. You gotta be patient because success does not come like that, right? Money does not come like that. Anything that comes to you quickly will leave just as quickly. So you guys have to be patient, right? If you want money in this, do less. And it's crazy, and people get that shit confused because they think, okay, more work equals more money, right? And that's why a lot of people got shit twisted because I mean, look at the state of the world, right? People work 60 years and have no money to their name, right? That doesn't make sense, right? If that was the case, more work, more money, then all these blue collar workers and mechanics and welders would be millionaires. And then The people who work and grind for 10, 20 years would have not shit, right? But instead, it's opposite. So open your eyes, right? Hard work does not equal big money, right? Smart work equals big money. So let's be smart. And what is intelligence require? It requires patience. So in order to make money, you need to be patient, right? So all I'm doing is waiting for these highs or lows to get either swept or broken through, right? And that's going to be my bias for the day. If I see a high get swept and broken to the downside, I'm going to look for downside. If I see this high get broken through completely, I'm going to target this high because we clearly are seeking more buy side liquidity. We clearly are trending up, right? It's very simple. If we come down and we sweep all these lows out, boom, I'm going to go long. If we close below these lows, I'm going to go short. Like, and then you guys get so confused and you get stopped out, and it's like, because you're trying to catch moves within this chop right here. You're trying to catch all this upside shit, but like, yo, scale out. Look on the 4 hour, look on the 1 hour, and just say, yo, we're chopping. I don't want to risk nothing, right? Why would you take low quality setups, right? You have to wait for the high quality setups. Think about it like this, right? My fault. Somebody walked in. I had to cut it this real quick. But where was I? Think about it like this, right? Think about it like you're a banker, you're an investor, right? Someone walks in, you've worked with him before, Harvard degree, hard worker, you know who gets the job done, great in sales, he's asking for a loan from the bank, a loan from your money, and you'll get a return. You're gonna give him the money, right? You worked with him, it's trusted, you know how this goes, and it's a smart investment compared to imagine a homeless guy walks in or a guy appearing raggedy and begging for money, asking for money, and he promises he's gonna flip it. He wants $100,000 and he's gonna flip it to 200K, and you're gonna get your return. But you don't know him. You don't trust him. You never worked with him, right? You're not gonna put your money at risk, right? That's the exact same thing with the stock market. Why are you gonna put your money at risk when you don't understand the strategy, the technique, right? Learn it, right? Trust it. Trust yourself. Trust the strategy, right? Wait for these moves to happen. Wait for clarity, confirmation, so you can trust it, right? Why are you putting your money within here, bro? This is just up, down, up, down, up, down, up, down, up, down, right? You gotta lock in, right? That's the only way this is gonna work. Trading is all mental. It's all discipline, psychology, but I don't want to yap too much, man. That's a breaker structure. That's how we could use it to our advantage. And I hope you guys learned something from this video, man. Just please keep your head down, stay focused, keep humbling young bucks. You know what I'm saying? We're gonna get to greatness soon. I'm gonna lead y'all to greatness. I have a Discord. If y'all wanna watch me live trade with me, you know what I'm saying? We all just a bunch of friends in here, just a bunch of guys just kicking it, trading, talking about life, making money together, man. It's really a vibe. So don't miss out on that. And yeah, I'm gonna see y'all in the next course video. Stay humble, stay blessed, stay grateful, and I'm gonna catch y'all.